New office, new background, and we still talk about investing and personal finance. This video is inspired from Invest for the Future. John talks in his latest video about his outperformance to the ASX index. And I thought that might be a good opportunity to see if my investments and my investment strategy actually outperformed the market, or how my performance was compared to the market. And in this video, we go into the details about my performance, and I will also show you what my depot and portfolio rebuilds over the last couple of months look like. I sold out of a couple of positions, and I also invested in new positions over the last couple of months. So let's go into detail and have a look into my performance. Start with a comparison of my portfolio against the Vanguard ETF that rebuilds the ASX 300. Starting on the 2nd of Jan. Both have 100%, and you can see, because of a stable market back in January, both were actually performing quite okay. I was a little bit outperforming the market by 3%. And then in March, you could already see that the market was going down, and the ASX 300 was already having a loss on the year-to-date time. I was still in the greens, but just by 1%. By that time, I already started selling a couple of my positions. I did not liquidate my entire portfolio, but by that time I was probably just 60% invested, and actually sold out of a couple of positions. And so luckily, when the market got down in mid of March and towards April, I was actually not that much invested anymore, and that's why my portfolio did not go down that much. But obviously, I also did not participate in the recovery as much as if I would have stayed invested for the entire time. By beginning of May, I was already break even again with my portfolio. And over the last 2 weeks, it was relatively quiet in my portfolio compared to the ASX that actually went up 4% over the last 19 days. But yeah, as you can see, luckily, because I sold out of a couple of positions and I did my portfolio management, and because I was not invested in, for example, the big banks and also mining industry, I was able to make sure that I don't go down with my portfolio too much. And the investments and the companies that I'm invested at the moment did perform actually quite well. Now looking into the portfolio and the individual positions that I had at the beginning of January and that I have now, and providing you with a little bit insights of what my portfolio structure looks like now. Whatever you see now and whatever my portfolio looks like, this is not a recommendation for you to rebuild exactly what I have, but it should give you some ideas, or can give you some ideas on what my investments have changed over that time frame. This was my portfolio from beginning of January. I was invested in 3 different ETFs, which is the ASX 300, one ETF that rebuilt the emerging markets, and another one that was an MSCI World ETF that covered international shares. And that ETF is to 60% invested in US companies. And the other position were split between 12 different individual companies that I was invested in at that time. Now, as I mentioned, I sold out to a couple of positions in March, beginning of March. Some of them I sold completely, some of them I just reduced the a number of shares that I was holding from those companies. And looking into the structure of the portfolio now, you can see that I shifted my focus again back to just Australian companies that are either individual companies or ETFs. So I sold out of my emerging market ETF and also sold my international share ETF because with my Australian portfolio I just want to be invested in Australian companies. And the only other international share that was in my portfolio before was Atlassian. It's actually an Australian company, but it's listed on the New York Stock Exchange. So I sold out of that position as well. Now looking into the exact structure that I have now, and I bought into some of them positions. So I stocked up a couple of positions in April, and I bought shares of a couple of other companies back in April as well. So the current portfolio is constructed from 13 individual companies and one ETF, as I mentioned, that is just one ETF that is just covering the Australian ASX 300. So recapping and checking if it was actually good that I was invested in individual companies and that I actively managed my portfolio. And from the numbers, you can certainly say yes. So I was able to outperform the market by around 18% when you look at the last 5 months. And that is quite good, I'd say. And especially when you look at those rough market conditions that we had. I'm quite happy with that, and I would like to continue doing that. Will I be as successful as I was over the last couple of months? Maybe not. It's very hard to say, and it's basically impossible to predict. But I really enjoy picking individual shares because I also enjoy knowing that I have invested in a very specific company that where I like the product and where I like what they do and how they do business. So yes, it is a little bit more effort, and certainly keeping track of the market is a lot of work. But I also enjoy the process. I enjoy researching companies. I enjoy looking what different companies are doing, and therefore for me it's actually more fun than actual work, and I really enjoy looking more deep inside. I hope this was interesting to you, and let me know if you would like to see more of those videos where I dive deep into my portfolio. Thanks for watching, and I will see you in the next one. Bye.